I remember being a little kid and going to my hometown. Do you remember Toys R Us's? Toys R Us's are fun. And I saw this like green looking box in the game section. At that time, I didn't have any games. I think my dad might have had a Super Nintendo or something, but something about this green box with the monkey Donkey Kong 64 on the front caught my eye. I told myself, I'm going to ask my dad for one for Christmas. And I'm sure there's an alternate version of me, kind of like that scene from Interstellar, yelling at that young Javier, no, don't do it. Don't buy it. Don't ask for that. But nevertheless, I did. And you could say it was a mistake, but that decision ended up for a lifetime of crippling addiction to video games. It's those little tweaks that we do in life that end up completely changing us down the road. Kind of like that, like little domino impacting a bigger domino and eventually having a big, massive result down the road. A lot of these little mistakes can be made during the home buying process. And what's so crucial is that they can be easily avoided just with a little experience and knowledge. So in today's video, I'm going to go over 5 common home buyer mistakes that I see even to this day to help you avoid them and worry about the traditional stuff, the existential crisis, the mental health crisis you're going to have when you're buying a house. I want you to have those things. I don't want you to have these things, okay? So let's get to it. Grab your paper, grab your pencil, and let's take some notes and get the ball rolling. The first one that we're going to really worry about is going to be the savings, because when you're thinking about saving for a house, you're probably thinking about your down payment, 3.5% down, 5%, 10%. Well, what if I were to tell you you actually need to save more? So the first mistake I see is not saving enough for the house, only thinking about your down payment. Let's break down a common scenario here. Let's say you're buying a $400,000 house and you know you need to save about 3.5% down. So you're thinking in your head, I need to have about $14,000 saved, right? Well, no, not necessarily. When you're buying a house, there's a lot more expenses that you have to worry about. Let's go down that list. There is your down payment, which we just discussed. There's your closing costs. Basically, everyone's gonna be charging you fees for the purchase. Your insurance, title company, lender, all those usually add up between 2 to 3%. Now, granted, there might be a chance the seller will pay for this, but you wanna have them saved just in case. Now, I'll give you this. Maybe you're a super smarty and you said, Javi, I already know. I got to save this stuff. I already got this. But here's the way you didn't consider. When you move into a house, what happens every time is you start getting excited. You want to start painting. You want to start changing your floor. You want to add landscaping. There's pavers. And even if you're like, we're not going to do anything, hey, guess what? You outgrew your bed set now. Now you need a bigger bed set with a new, what is that? What are those called? I don't even know. Opening door slings. Drawers. Oh my gosh, I'm so sorry. Your kids are going to want, trust me, there's going to be things that you're going to find a way to spend money on. And let's just say you're a monk and you're just like, nope, I'm going to live in my house with no furniture or no bed. Okay, there might be issues that pop up. There might be repairs that pop up. You want to have at least, I mean, shoot, another maybe $10,000 saved just in case for any potential issues that might pop up. Can you imagine if you bought a house and the only thing you had in your bank account was a down payment? You're closing with no money in the pocket. Let's say you're lucky enough to get your seller to pay your closing costs. Good for you. But now you're back to not only saving, but wanting to use your money that you're earning to improve and grow your house. So you're going to put yourself in a tight spot where you're not going to be able to save because you're going to spend your money on the house, or you're going to just save and not be able to improve your house, right? So be smart about it. Don't just save your down payment. Save a little bit extra cushion and this isn't even talking about an emergency fund. Please have an emergency fund on the side. I'm hoping that that's just accounted for already, despite what we're talking about. The second most common homebuyer mistake I make is just this negative perception that FHA has, right? The common misconception that PMI equals bad. Don't get me wrong, FHA has its issues. Not only are you paying that PMI at usually 0.55% of your loan amount, which for let's say a $400,000 house, it's about $170 to $220 a month you're paying for the rest of your life. But on top of that, they also charge you a premium at the beginning of your loan, to just raise your loan amount. So I get it. It has its negatives. I challenge you to not just think about it negatively. And I challenge you to actually run the numbers when it comes time for you to buy a house. Let me tell you a story. Had a client of mine where we were looking at new builds. Now, a note about my client, he spent a lot of time saving his down payment and despised the idea of having mortgage insurance. If he could, he would have a tattoo on his chest that said F PMI or F mortgage insurance, because he hated the idea of having that. We were out looking at new builds and they gave him two options. One of them was a 3.99% interest rate with FHA, or the other one was a 4.99% with conventional, as long as he put 10% down, which was he was planning on doing. Now, he had amazing credit, so his PMI with conventional would have been really low, even though if he wasn't putting 20% down. Now, which one did you think would give you a better monthly payment? Off the bat, you're going to think, well, for sure, conventional will, because A, the PMI is a lot lower. He's putting a higher down payment. But in this case, that monthly payment was very similar for both numbers. As a matter of fact, it was slightly lower. So it was a no-brainer for him to actually switch to FHA because of that. So obviously, this was a different situation because FHA clearly offered a lower rate, but really, run the numbers. Even if you're buying a resale right now, FHA's interest rate is significantly less and could potentially make up the difference of the PMI. Here's a quick little just calculation for you to run. Don't just compare FHA interest rate versus conventional interest rate. Compare FHA interest rate plus 0.55. 0.55 is going to be what they charge you for PMI. And in case you need a quick breakdown of how that works, this is for all my math nerds. Everyone else, turn away. Cover your ears, cover your eyes. If you're buying a $400,000 house, you calculate the loan amount, which would be the price minus the down payment. Down payment's about 3.5%, so we'll put 965. So that's approximately your loan amount. How you calculate the PMI that you would pay is you get your starting loan balance and you multiply this number by 0.055. So it would be 0.0055, and you get this number, you divide it by 12, and this is the amount that you pay for your entire life of the loan. For conventional, it's based off your credit, it's based off other factors. So like I had once a lender tell me, if someone's putting 19% down and have good credit, then instead of 0.55, it might be 0.1, right? Something completely low. So anywho, the formula to use to calculate your total like comparable is you get the FHA interest rate, you add 0.055. So right now it's 6.25. If I add 0.55 to that, that gives me 6.8. And compare that with conventional. With conventional, right now the interest rate's at 6.8. If you have extraordinary credit, you might be paying 0.25 or 0.35. So even with conventional, 6.85 plus 0.2, 0.3, it's giving you an interest rate in the 7s. So when you're calculating your affordability of monthly payment, combine both numbers. That's why for some people, it might make sense to assume an FHA loan that even with PMI, like let's say you assume a 3% interest rate FHA loan, if the PMI on that is 0.55, technically you're paying about 3.55, right? So you want to just calculate that PMI as part of your interest, essentially, that you're paying. That's still significantly cheaper than going and buying a house conventional at current market rate. So it doesn't exactly work, but it's just kind of like a mental trick to kind of go over when you're calculating numbers. The point is, yeah, conventional might be the smarter option most of the time, but a lot of you guys think that you just have to go conventional because it's just the best way to go. But really, you might not be in a position where conventional is actually getting you the better deal. Run the numbers for both situations and really make sure that it's the better deal for you. For the third home buyer mistake, we're gonna get out of the pre-qualifying preparing phase and we're gonna be looking at the actual searching for a house phase. This third home buyer mistake that people don't make is they don't realize that the list price does not equals the sales price. They'll look at a list price with emotion, with anger. How dare they? They're trying to ask this much for this much. Do you think blah, 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 blah? Like, no, let's not get emotional about it. If you're looking at someone's house that's for sale, let's say your Aunt Judy is selling her house for $450,000. That $450,000 does not have any weight to it. That is just a number that the seller and their agent came up with on what they think the house is worth. What you instead want to focus on is not the actual number, but the reaction to that number. So if a house is listed for $450,000 and it's been on the market for 4 weeks, and when your agent calls their agent to figure out if they've ever had any offers, the answer is no, we haven't had any offers, then you judge the reaction to that price. Likewise, if there is a price for a house, whether you agree or disagree with it, and the reaction to it was now over the first weekend, there's multiple offers and multiple showings, that's what you want to put weight on. Don't put weight on the number, put weight on the reaction to that number. And then that's how you're going to decide what offer you're going to make, right? Because the list price does not always equal the contract price. The fourth common home buyer mistake I see being made is people just settle for one pre-qualification. They settle for one lender. Here's the reality of lenders. I feel like I gotta start whispering for this one. Come in a little closer. Okay. Here's the reality about lenders. They're all going to start high, because they're going to try to make money off your loan first. And if that doesn't work, then they're going to go lower. But they're not just going to immediately give it up and just give you a lower rate. They can't do that. They probably don't have the ability to do that. They're going to have to go talk to their manager, to their supervisor to do that. And the only way they will do that is if they have a competitor. And the only way they're going to have a competitor is if you give them, hey, I shopped you around, this is the cheapest rate. And the only way you're going to get a competitor to lower their fees and their rate lower than your current pre-qual is if you go talk to them after you talk to the first lender and you say, hey, these people are offering me this. And then they go, oh, we can beat this, because then they went to their manager. This is the game. It sucks. I wish I could just, I have somebody right now that I can reliably say they're going to start pretty low. They can still be shopped around and squeezed a little, but you have assurance knowing that they're going to be pretty low already. And even if you don't want to shop them around, you probably got a good spot already, right? You're already here. But this is the game, my friends. You have to squeeze them. You have to shop them around, because this industry that you're buying a house in, unfortunately, every industry that we're dealing with, realtor, insurance, lender, title, they're all commission based, right? They're all salespeople. You're basically gonna feel like a nice piece of prime meat everywhere. Use it to your advantage. Let them fight for you, so that way you end up with a sweet house with a sweet rate, with the sweet everything. People are doing it. I see it happen every time. Don't settle for one lender. Do the shopping around game. And you don't need I have a playbook like for my clients that I have. You just need to talk to one, offer the numbers, talk to others, have the numbers, let them fight for your business. And the final common home buyer mistake I see being made is they look at their home inspection as pass or fail. I still see this every day, and it drives me crazy. Javier, I passed my inspection. Oh, I failed my inspection. Oh, this, that, or the other. You're buying a house with the assumption that everything is in good shape. I don't care if it's 100 years old. I don't care if it's 50 years old. The assumption that you're having, unless it's previously disclosed, is everything is in good shape. If you are doing your inspection and you discover, because the inspection, don't think of it as the inspection phase. Think of it as the inspection/discovery phase. You discover that the roof is not in best of shape and probably needs to get replaced in the next 5 years. Or the AC is in terrible shape and it needs to get replaced soon. Or whatever, I don't care. Whatever it is you're thinking about. Then at that point, your choice should be, do I want to move forward with this house or not? If the answer is A, I want to move forward with it still, it's rare when that happens. It's like that happens when like the house is in really great shape. But what typically happens is people go, well, I don't want to move forward with this. And then you ask yourself, do you go to two options here? I don't want to move forward with it. I'm leaving and I'm canceling the transaction, getting my deposit back, or I don't want to move forward with this, and I will only move forward with this if these items get remedied. We inspect, we discover. If we discover something that's concerning to us, we ask for it to be remedied. If there's no solution to what we're requesting, then we consider if we want to cancel or not. It's that simple. There's no need to overthink it. Those are the 5 that I think are the most important. Now, there's a lot more that I can think of. So if you enjoyed this series, give me a hell yeah in the comment section. No, don't give me hell yeah. Just tell me if you enjoyed it or if you have any others, because I feel I can come up with a lot more if you guys want and you like it series. So if you're interested in any home buying resources, I got a bunch of cool spreadsheets like cash to close calculator, timeline tool, home budget, affordability calculators, mortgage calculators, all kinds of good stuff. They're available on my resources page down below. We've had thousands of downloads on it. We've had a lot of 5-star ratings. And if you're strapped for cash right now, all you got to do is type 0 here and hit I want this and you'll get it for free. But I do appreciate all those folks who are able to at least contribute a little bit, because It helps feed my family tacos. I don't know why I keep saying tacos. Listen, I've been trying to not eat tacos lately. My blood pressure has not gotten better. I'm 32 now. I have to take care of myself. So I'll challenge you guys. Let's not eat tacos together. Let's join on this journey. Let's no more Magic the Gathering cards. No more tacos. Let's just all lock in, start saving our money. And you know what? I'm just gonna order some tacos on DoorDash. One thing I'm doing is I'm doing 10,000 steps a day. I am at, let's see, 4,500. So I'm gonna get to walking. See you guys in the next video.